Hey, ladies and gentlemen, this is James from Dividend Stock Talk. It is Saturday morning, 1 a.m. What am I doing up so early or so late, depending on which way you look at it? Well, I'm under the 30-day challenge to do a video a day, every day for 30 days. And today, it was such a busy day. Let me briefly tell you what it did. I got up at 6 o'clock this morning. I decided to go play with my car, 51 Mercury. I had to do a little bit of body work to it, shine it up a little bit, make it look pretty. After that, had some breakfast, went to Dunkin' Donuts, got my iced tea. After that, I decided I was going to take a ride up to New Hampshire to do some kayaking, number one, and to go look at a gold wing. This is a motorcycle I like to get. I drove all the way up. There was a 3-hour drive. Got stuck in traffic, had problems with the car. Did my kayaking. I was on the puddle for a little bit. Kayaking around. It was my first kayaking adventure for the year, so that went pretty good. Get over to the bike, take a look at the bike. Had a few problems, a few issues. I was there for about a half hour. I decided not to get that bike in particular, but I did help the guy out that was trying to sell it. I fixed a few things on it for him. I gave him a few pointers on how to fix it and how to resell it, because I wasn't going to get it because it was just I thought it was too much for me to take care of. It was just a situation wasn't quite ideal. There were too many other bikes that were a better deal for me or a better fit. So the ride home was another 2-hour ride home. Get back home, and then I had to do this Facebook ad thing to try to figure out how to use Facebook ads. Needless to say, one thing or another, I didn't get done until about 12:30. So I'm sitting in front of my computer at 12:30 in the morning trying to pump out this video and trying to show you what went on in the stock market today and where we are. Now, options expired today, and we had a couple of tips that we gave out during the week. I'm going to go over a few of those to give you an idea of what happened. Now, let's jump in, take a look at where we are, what we did. Here we go. Now, we bought Walmart and I think that's Charles Schwab. Yeah. Walmart and Charles Schwab were tips on both the dividend capturing and the options part, where it had a large return. I think Walmart was offering around a 25% return, and Charles Schwab was offering like a 35 or close to 40% return. Now, we also yesterday gave out a hot tip for ExxonMobil, which was offering a 40% return if certain parameters happen. I'm going to go into each one of those three and tell you exactly what happened. I'm not going to sugarcoat it because, hey, this stuff works great, but it doesn't work all the time and it's not guaranteed. So you have to take that in consideration. Hey, make your play, but remember, you can lose or you can win. Where there's high risk, there's high reward. So yeah, Walmart was offering 25% for 3 days. Did it make it? Yeah, it made it. Schwab also offering close to 35-40% for 3 days. Did it make it? Yeah. Did ExxonMobil make it? No, it didn't. ExxonMobil tanked. Why did it tank? I don't know. I really didn't have time to look at it today because I had a busy day. What was I doing? I was living my life, having fun, doing what I enjoyed doing. Anyway, let's get down to the nuts and bolts and find out exactly what we're looking at. All right, now we looked through SKT plenty of times. I don't really need to look at that anymore. Our target price is $32.90. She's at $26.20. That's a long way away. We're going to be sitting on this one. We'll probably collect some more dividends on that. DFS, we collected dividends on that once already. She's target price is $67.18, and she's at $60.33. We have to look at a 10% or more increase before we're out of that one. Here's the big loser of them all. I really shouldn't say that. Macy's is a wonderful company. It's been around for over 100 years. We collected dividends twice. We started out with 1,600 shares back in February. February we collected 21 21 extra shares as a dividend payout. And then, what was it, May, we collected another 21 shares. So we won't be getting another, we'll be getting another 21 shares probably sometime in August, which is next month. So that would be 3 sets of dividends that we're collecting from Macy's. Are we going to sell it at a loss? No, we're not going to sell it at a loss because we're getting a 3% return. 3% return, hey, it's better than a CD. It's not as good as some of our other plays, but you got to play the game. You got to take the good with the bad. Is it always going to be sunshine and roses? No. Sometimes you're going to get rain and lemons. So that's where we are now. So Schwab and Walmart is looking pretty good. Schwab, we got a target price at $43.77, and right now she's at $42.55. Very close. She may be out in the next couple of days. I don't know. Walmart, our target price is $80.62, and right now she's at $79.81. Very close to being out in both positions. Now, we only got 500 shares of Walmart and 1,000 shares of Schwab. However, almost the exact same dollar amount. You got 20,000 into Schwab and 20,000 into Walmart. So, they're even trades, but we get, twice as many shares of Schwab as we do Walmart. So that being said, we're looking not that bad. I mean, we're down 1,800 for the day, which doesn't make me a happy camper, but you take the good with the bad. Now, that's for the dividend capturing. That's where we buy the stock, collect the dividend, and we're also looking for a 2.5% increase. This is what we call dividends on steroids, where we look for a 2.5% increase in the stock price from the time we buy it. Now, we like to buy it 10 days prior to the EX date. Does it always work? No, it doesn't always work, but it works enough to make us quite a bit of money. We actually make double-digit returns in this account. Last year, I believe we did 24% in this one account here. Right now, we're hitting 3.6 for a little bit more than a half a year. Not as good as we did last year, but we got a couple of big losers here. We got Macy's and SKT. I mean, both of them are quite on the high side. But we're not, like I said earlier, we're not getting rid of them because we're not going to take the loss. I just assume keep collecting the dividends to show you that, yes, although I've been trading for over 20 years, sometimes I get stuck with something I don't like. So I'm just going to hold on to it and see how it progresses over the years. Because Macy's, it has its ups and its downs. It has a seasonality to it. It goes up a certain time of year. It goes down a certain time of year. Right at this moment in time, it's in the down season of the year. So it's going to come up in the third and fourth quarter. If I have to hold it that long, so be it. Anyway, that being said, as the year progresses, you will see how we do with the dividend capturing. Okay, it's a simple, easy, safe strategy. You buy a good quality company that you don't mind holding for a long period of time. You buy it, you collect the dividends, you have a strike price that you're looking to sell it at to get your profit. If it hits it, great. Move on to the next company, take that next 2.5% increase. That 2.5% over and over and over and over again over the course of the year, instead of getting 3 to 5% return like a lot of people are getting, you can get anywhere from 10 to 20%. Like I said, last year in this account we did 24% return, which is great. Okay, let's get out of here and let's jump into the option strategies, which is right there. Monitor, and here we go. Colgate-Palmolive. Let's look at that. Now, Colgate started out the year right around the 74 area. She quickly dropped down to 72, traded sideways for a little bit, and then she made a low of the year way down here at 63. She trades in this trading range for about 4 or 5 months. Then the end of February, she jumps back up to the 74 trading range, hits a high of 77, and she finishes out the last couple of months in the 72 area. Now, we bought Colgate-Palmolive in the beginning of, let's just open this up to find out exactly when we bought it. Few trades, July 1st. Now, we bought it in July 1st, and here we are at the very last week of July. We ended up buying it at 74, selling the 74 covered call the first week of July. I think we collected $2,600 on that. The second week of July, we collected $22. Third week of July, we collected, I think it was $1,400. And this week, we only collected $1,000. Next week, as a possibility, we can collect another anywhere between $1,000 and $2,200, depending on where it goes. Some strange reason, she opened up at 72.82 and closed at 72.52, and we did not get called out. So next week, again, we're going to sell the 74 call and make another couple $1,000. Really, don't get me wrong, I really want to get rid of it. I'm only bringing in 1% a week in this account, and I should be happy with 1% a week. So let's just leave it alone, because 1% a week actually comes to over 50% a year. Okay? If you compound it, it comes to over 70% a year, or over 60% a year. All right. That being said, let's take a look at the companies that we said we were looking at. Now, these are the companies that have the weekly options. Mondays, we looked at all these. U.S. Steel didn't work for us. VLO actually did work for us. So let's quickly open up VLO and see where that was. VLO. Okay, Monday, she was at 67.65, somewhere in that area. She closed, or she opened at 67.63, which means we would have bought it at 67.63, and we probably would have sold the. Oh my goodness, it's kind of hard to do this right off the cuff. So let's go VLO. All right. VLO opened at 67.63, which means we would ended up selling the 67.50s. Okay, 67.50s, we would have sold it. I can't go by the numbers because all the time decay, and they're basically worthless now. So that's one we would have done, and as you can see, we're at 66.69, so we would have lost on VLO. Oh, sorry about that. All right, let's go to the next one. We decided X, which is U.S. Steel, didn't have a large enough dividend for us to look at, so we decided to go against that one. DHI, I don't think we had that. They must have just recently announced it. Okay, the dividend announcement, that was 3 days ago, so that was after Monday, which was a couple of days ago. So anyway, DHI, let's quickly take a look at that. DHI. The 26th was Wednesday. Okay, so they announced the dividend on Wednesday. And what happened? Down 3 days in a row. Is that a good thing? No, it's not. They get a dividend coming up on the EX date is the 7th of August, which is still about 2 weeks away. So it's a possibility if they find a bottom. But let's look and see what this stock has done for the year and see what we're looking at. Okay, so the high for DHI is 37.46, and the low is way down here, 26.69, right there, back in November, right around election time. Let's see what the seasonality offers on this. Okay. See the red line? That represents a seasonality, what she normally does this time of year. She goes down. So that is not a good one. We're not even going to look at that one. So Monday, all those guys, those are worthless. Now we took a look at some of these. COG, not worth our time and effort. These guys just announced this week. They announced this week, 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 and they announced this week. Wow. So the only one that we had for Monday was SRI, and we weren't going to do that because look at this. 1 cent, not worth our time and effort. But we could take a look at those over the weekend. IBM, I believe we looked at. IBM, and they were just too pricey. Now Wednesday, we looked at BA. I think that's Boeing. Yeah, Boeing looked pretty good. But for some strange reason, we didn't do that. We didn't do Boeing because the numbers weren't right. That's right. It was a $200 stock. We decided not to do that. GSK, they announced 3 days ago, so we weren't able to look at that one. Schwab, 8 cents. I usually don't do below 10 cents, but Schwab, it's a big company and everything looked good, so I said why not. And Walmart, can never go wrong with Walmart for some strange reason or another. Let's put Walmart over here. WMT. Okay, so here's the seasonality for Walmart. Okay, that's where she is now. So would we be doing it this week? No, we won't, because look at what she's doing. Okay, last week we got in here on Wednesday, which was right here on the 26th. So you had the 27th, the 28th, you had 2-3 days left, and it's a little upswing. Did it do it? Yes, it did. However, I want to be out of Walmart within the next couple of days because this is going to go look down, and I really don't want to do that. All right, so now mobile. What happened? Oh, American Airlines. We didn't see those yesterday. They must have just announced today. Oh, they did. Look at that. They announced Friday that they have their dividend in 10 days. A lot of good that's going to do us. Now, ExxonMobil, let's take a look at them. XOM. Okay. Wow. That's what we were looking at the other day. For a 40% increase, and she just tanked on us for some strange reason. Okay, here's where she was yesterday. So Monday was here, Tuesday, Wednesday, Thursday. Now here we are looking at Thursday, hoping that you have a bottom here, a bottom there, and a bottom way over here. So we got a triple bottom on this thing, and here she is here with a nice up day. And I'm thinking to myself, hey, you got ExxonMobil, big company, plays a nice dividend. It's like over 3.8% dividend yield, which is great. So why not do that? And why did she open low? Look at the volume. The volume's almost twice as much. She opens up low, and then she drops all the way down. She made a low of the day of 78.27. Now, what we wanted to do yesterday is we wanted to buy the 80 50s, which is, 80 50, and all the stock had to do was just stay where it was at 80 50 or above. So if it went up, we make money. If it stayed the same, we make money. We'd only lose money if she went down. She went down, and she went down a lot more than we thought it was going to do. So had you done that one, you would have lost the money. You would have kept. I would have suggested you would have checked right around 3:30, which we usually do. But I was stuck on the road in the highway in traffic, and I pulled over. And I had my computer. And I was getting ready to do a roadside broadcast, and my phone was out of reach. I was up in the mountains, up in New Hampshire, taking a look at this bike, and I was just out of reach. I was pissed. I paid extra money for the service on my phone so that I can bounce my computer off of my phone, and it usually works everywhere. But for some reason today, I'm sitting on the side of the road with my computer ready to shoot a broadcast. I got plenty of time, and here I am not getting the signal. Really made me upset. I would say a different word, but keep this PG. So yeah, we kind of fizzled out with ExxonMobil. What a bummer. Okay, so Monday we can look at CF, Certified Freight, IP, which is International Paper, JBL, not bad, Kroger, and Eli Lilly. those are 5 decent companies that we should look at on Monday. And we'll go over that tomorrow or Sunday, because remember, we're in the 30-day challenge and we're going to do a video every single day. So if you don't catch me live, you can catch the repeats the very next morning. And well, it is 1:20 in the morning, and we're going to do another one sometime in a more reasonable hour of the day. That being said, I'm going to check out for now. And if you guys got an ExxonMobil, I'm going to apologize now. Does it work all the time? No, it doesn't work all the time. But high risk, high reward, or high reward, high risk. The numbers looked good for ExxonMobil, and it looked like it would have been a 40% return for one day. Okay, too good to be true, and it turned out to be. However, don't get upset about that, because Walmart worked out. That was a 25% return, and Schwab also worked out, and that was like a 35 to 37% return for 3 days. So those both worked. ExxonMobil didn't work. Sorry, it happens. All right, that being said, you guys, I'm going to check out now, and I will catch you sometime tomorrow to do another podcast, and we're going to look at these 5 companies tomorrow. So I will catch you then. And this is James from the 10-Minute Trader and Dividend Stock Talk. Have a great day.